Welcome to the Fear and Greed Afternoon Report for Thursday, the 11th of August 2022. I'm Sean Aylmer. Every afternoon we've got the 5 stories that happened today that you need to know about. Let's jump into it. Story number 1, the S&P ASX 200 closed up 1.1% today to 7,071 points on the back of a strong lead-in from Wall Street. Consumer discretionary companies, real estate investment trusts and material stocks all led the way. ANZ was the best of the banks, up 1.7%. BHP was 2% higher, as was Wesfarmers. Goodman Group and James Hardie jumped 4%. On the other side of the ledger, Rio dropped 4%. Property group Mirvac's share price jumped 4% after announcing a 5% rise in net profit. Lithium producer Lake Resources was up 19% today. Now that means it's up 150% in less than a month. Crazy. Adore Beauty Group's share price jumped initially this morning, but then fell sharply. It was down 5% after Chief Executive Tennealle O'Shannessy said she'll step down early next year and shift to ASX-listed IDP Education. But by the end of the day, Adore's share price was back up 5% above where it started. A fickle industry. Best on the day was Life360, up 13%. Worst was Computershare, down nearly 5%. Story number 2, Telstra has lifted its dividend after announcing a fall in net profit. For the last financial year, Telstra made $1.8 billion, down nearly 5%. Underlying earnings, which take out one-off items, were up 8%. Telstra share price fell 1.4% today. The standout business for the telco giant is its mobile operations. Story number 3. In the world of economics, inflation expectations are central to what's going to happen to interest rates. And the good news is that expectations have tempered just a touch. According to the Melbourne Institute, consumer inflation expectations fell to 5.9% in August from 6.3% in July. Now, one number is hardly a trend, but it is hopeful. The Reserve Bank is keen to cap not just inflation via higher interest rates, but also inflation expectations. If people think prices are going to rise, they're more likely to ask for a bigger wage hike or be prepared to pay more for goods and services. Price rises become self-fulfilling. So any indicators that suggest expectations are being tempered is good economic news. Story number 4, QBE was hit hard by investment markets in the first half of this year, but its underlying business is doing pretty well. Revenue was up 26% for the June half, though net profit was down 66%. That's those investment markets. As I mentioned earlier in the week, insurers take premiums, invest the money, and then later on pay out claims. When markets fall, all those investments don't do so well. Investors look beyond the volatility and pushed QBE's share price up 3.3% today. They like that premium revenue is likely to jump 10% in this calendar year. QBE is a very global company. It put aside $75 million for potential losses from Russia's invasion of Ukraine. Why? Because it provides political risk cover in Europe. And story number 5, the Aussie dollar pushed above 71 US cents today, the highest level in 2 months, and it was all because of what's happening in the US. July consumer price data came in showing headline inflation falling to 8.5% for the year, down from 9.1% in June. On a month-on-month basis, inflation didn't rise at all during July. This was below what market economists were predicting, and immediately investors priced in a lesser chance of the US Federal Reserve lifting interest rates by 75 basis points. What's all that mean in English? Inflation, which was at a 41-year high, came in lower, raising hopes that the worst might be over for price rises, and that means interest rates won't have to jump by as much as we thought. That pushed the US dollar lower and the Aussie dollar higher. That's it for the afternoon report for Thursday, the 11th of August, 2022. Adam Lang and I will be back tomorrow morning for the Friday edition of Fear and Greed. I'm Sean Aylmer. Enjoy your evening.